What's going on YouTube? Welcome back to another video. In today's video, I'm going to be going over a playbook trading setup that I took on January 9th, 2024, trading Tesla puts to the downside. For those of you that don't know, I've been trading for 5+ years now, primarily large cap options on the US stock market. And on my channel, you'll see some of my higher quality trades and the thought process behind it. But I do encourage you to check out my Twitter and my free Discord where I'm more active on a day-to-day basis. Hopefully you're able to learn something in today's video. And so that being said, let's get right into it. I like to start on the higher time frames to understand the broader context of what's going on, and then zoom into the shorter time frames to find opportunities. And the reason that this was a high quality setup and a playbook trade that I'm marking is because on the higher time frame, it was setting up nicely. The weekly chart, we're seeing Tesla consolidate in this range from about 200 up to 260, and it hasn't broken out of this triangle. On the daily chart, over the past 3 days, we've put in this range with the highs at 241 and the lows at 235. And you can see that in the past, this acted as a high volume area that we were stuck in for most of December. In my pre-market game plan that I posted 20 minutes before open, I said that it was range bound and I was watching for a later morning trade if clear momentum above yesterday high or below 235. 235 has acted as the low throughout the week, and we clearly saw that buyers were holding this area. So I was looking for sellers to take over if we could get well below 235 for a continuation move. Right off open, Tesla had immediate downside and was relatively weak compared to the internals. When I say the internals, I'm referring to NQ and ES, which is the NASDAQ and S&P 500 futures respectively. We had a strong move right into 235 with absolutely no pullbacks, and this is now about 30 minutes into the market open. On this candle here at 9:59 a.m., I went short, taking 5 puts of the same week expiry 230 puts, and I entered at a fill price of $182 per contract. This was a total investment of just $910, and my risk on this trade was if we broke back above the 236 level, and I was risking about $110 in the trade. The reason I had 236 as my stop was because yesterday we had wicks all in this area, and 236 proved to be a clear area where buyers were coming in. And so today I was looking for yesterday's low to turn into today's resistance. When we did reject it, the premium started to move down very fast as it sold right through 235. There were no buyers left at 235, and so I was completely in the driver's seat. Towards the close of this candle, I got out 2 of the 5 contracts at a fill price of 227, and then I ended up holding the remaining 3 contracts throughout this consolidation, selling one here at 249, one here at 310, and one here at 308. Initially, I wanted to wait until 230 because that was a higher time frame area that I expected buyers to step up in. But on these candles, I saw a lot of sellers coming in. And when you're trading options, you want to sell the implied volatility spikes on these strong moves. This candle that I got out of my last contract on actually ended up being the low of the day, which turned out to be quite lucky. The reason was because I saw 232 had some size stacked on the level 2, and so I was happy with taking it off here, not wanting to hold through a retracement. Overall in this trade, I made $411 and was only risking 110, so that's like a 3.7 times risk to reward ratio. And what gave me confidence to hold this was that the NASDAQ and the S&P 500 was moving higher, but Tesla was clearly moving lower, showing relative weakness. So I was confident in taking this position and holding it for the move down as it was not correlated to what the internals were doing. And you can now see that at the end of the day, Tesla closed right below that 235 key level that we have marked. Where I personally went wrong on the day was I got caught up trading AMD off open, taking a couple small losers, and then exhausting my mental capital. And by the time I was taking Tesla, this was my 4th trade of the day. Typically, I have a rule where I try to only take 3 trades a day just to limit myself from over trading and from going on tilt. And so because I was impatient off open and seeking trades that weren't necessarily the highest quality, I was unable to capitalize on a high quality setup that presented itself late morning. This is something that in my 2023 review of all my playbook setups that I looked at, I identified that I made the most money on trending days when I was patient off open and able to capitalize on setups that look good and take advantage of on higher size. Because I had losses in the morning, I wasn't able to size up on this trade, and that was a limiting factor given it was an A+ setup. I do break down my full trading day and the trades that I took on AMD on this day in the morning and the psychology and mentality that went behind it. I posted that video in my free Discord if you did want to join and watch that. I do post daily videos, just quick recaps of the trading day that I had, and I'm a lot more active there and as well on Twitter. So hopefully you learned something from this video. Hopefully you find value in it. This is just me sharing my trading journey and sharing things that I think are of value to the community. And so if you appreciate this and you learn something, please drop a like, subscribe, and we hope to see you around in the next one. Thanks.